music. Love that. All right, Jim, great to see you. Long time no see, right?
About
What's
an hour?
been happening? Yeah, about an hour.
Market's been falling. That's what's been happening.
That has been
I
what's
think.
been happening. Yeah, we're a little flying blind here, but we got some charts pulled up. We'll touch on the current market just a little bit, but the reason why we're here today, Jim, is because you have several decades of hedge fund experience, a track record of outperforming the market, and a personal success story that's really great with capturing a big move, $1 million trade. I'm going to make you brag on yourself a little bit here, but I think that's what we're here to learn, right? In the How to Do It track at the MarketWatch Best New Ideas and Money Festival. So we want to know all of your secrets so we too can ride the wave of big market winners, because you have done that successfully coming out of bear markets. So that really applies to today.
I completely agree. I think we're at the precipice of a major opportunity. This bear market that we're in, it's not just a garden variety bear market. It's much deeper. It's much more severe. The damage has been much greater, and it's compressing the valuations down to such a level that if we have a third leg down in this market, it's going to be a generational opportunity, like the 2000 dot-com crash or the 08-09. We're getting into those zones. A third leg will certainly get us there. But I want to, hold on. You said a lot of really nice things. For every monster that I've had, I've probably had 25 or 30 losers. So
there's some persistence there. You didn't just strike gold and that's all you've done.
Staying committed to a discipline through the rough times gets you to the opportunity, the preparation for the monster opportunities, which are brewing right now. So don't let this bear scare you. Remain in cash, chill, and be ready to change from bear to bull in a brief period, because it's coming. And I don't know if it's in a week or two, or if it could be 10 months or a year, but it's not going to be a lot longer. This bear started, depending on how you want to calculate it, it's getting older.
So opportunity could be knocking soon. But with all of the pessimism and the bearishness that's out there, how can you be so optimistic? That's something that I love about you. You always exude this optimism. Is it because you have firsthand experience and you've seen what can happen after these bear markets?
Confidence comes from success. But if you're just starting out and you haven't had it yet, you have to lean into a mentor. And I leaned into Bill. I knocked him off. I thought, what?
And for those who don't know,
Bill O'Neill.
IBD founder Bill O'Neill.
Yeah, why invent anything? There's a master out there who's done something already. Just follow him, copy him, knock him off. And because I had no confidence, because I hadn't made a nickel. I was a loser in the market for a great. My wife's like, look at our tax returns. Go back to school, get a law degree. This is not.
So how long did this struggle, so to speak, happen before you had a big winner that you rode a major wave?
John Boyk chronicled my career in his book, How Legendary Traders Made Millions. And I was a loser for like 3, 4, 5, 6 years. I had not a clue. And then I found Bill O'Neill's method and I embraced it. So the confidence came from looking at Bill's success. And then once you get some big wins under your own belt, then you have your own confidence to lean into. So, and the method just works if you have the personality, the discipline, the patience, the self-control, the psychological components.
Right. And so we'll get into some of that secret sauce of some of those rules that you use that have helped you. But first, I also want to talk about a little bit of the mindset that is required. Dig into that a little bit more, and then we'll put some of these learnings into practice too. So we talked about having that persistence, and to capture a major winner, that's not just a 10% gain here and there. You really are going to be tested, and timing is key as well.
I mean, if you want to change your life, if you want to go from first class to private jet, you have to sit with these monsters, and they're going to buck you all over the place.
Bucking broncos or
huge,
bull.
Huge. And I had the first
bull in a bull run. I guess that's why.
Let's go.
Yeah.
The first one I really made, I had a big win in, was Broadcom, and I put, I think, this is 20 years ago. This is right out of the dot-com bubble, or it was going into it, and I put like my whole account. I had a huge position in this thing. Maybe it was about $400,000, and it ran like crazy. And their lockup agreement came off, and it corrected. I was up probably like $1 million on it, and I pulled back to the 50-day, and I gave up $400,000 of my gain.
Wow.
And I sat through the whole thing because I knew, number one, it didn't break the 50-day moving average, but I also knew that they had the chip for satellite. The whole United States was going from dial-up internet access to high speed. And they had the chip for cable modems, for DSL, and for satellite. And I knew the stats. There was like, 15,000 people a day were going on, or some huge number. So even though it was correcting, I knew the total addressable market was enormous. Right. And the stock never broke the 50. And the reason it went down was the lockup coming off. So all those things kept me in it. And then when it came out of there, it just exploded higher. And that was my first really big, that was a life changer for me.
That's incredible. So how can you withstand those wiggles and wobbles other than looking at a moving average and having that discipline and knowing that the waves have peaks and crests, right? So when you are in those times where you're seeing $400,000 drawdown, what else can you lean on to give you that confidence to stay in for potential life-changing money?
You understand, that was all the money in the world to me then. Like, that was a huge amount of money. And you have to have, it's just so difficult to say, a disregard for the money. If you count it and say, I could buy a house or put my kid through college, you are going to choke. You're ramping the pressure on yourself. If you have I don't mean disrespect it. You have
maybe a little bit of a numbness, or you have to distance yourself. Think of it as numbers instead of
exactly.
money.
You have to be kind of cold and calculated. Like if you're going, oh my God, I just lost $400,000. I was a kid. I'm 57 now. I mean, back then, that was everything to me. You have to be following a system with discipline, not emotional. Emotions, why are so many NASA rocket scientists losers in the market? Brain surgeons. Because they're emotional basket cases. They have no situational fluency. They don't know themselves. If you don't know yourself, the market's going to tell you all of your flaws. It will expose you very, very quickly. Now, again, I have gone through long periods of just bad. I'll just be blunt. In 2001, after a 100% year in 2020, my ego was raging.
Crypto. 2021.
2021. I'm sorry. 2021. My ego had gone through the roof, and this happens. Even though I'd been doing this for 30 years, I was like, oh, I'm down a little bit, and the advanced decline line topped, and I'm like, it's okay, I can make back 10, 15% in no time. And I ended up down for the year, and the market was up 20%. So even people who have had great success historically is susceptible to all of the frailties of human emotion. And if you don't have that in check, all the things we're going to discuss, the anatomy of a true market leader, knowing the anatomy of a true market leader and not knowing yourself, you are going to get wrecked.
Yeah, so that's the other half of the equation. But here today, what we can't talk about, like you said, the anatomy of those true market leaders, because again, to hold through some big moves, stocks aren't going to make it easy, right? There's going to be tests, whether it's the market or some sort of news comes out that really hits the stock. There will be those tests. So how do you build that conviction? It seems like these elements that you're looking for, that you want to have checked off the list, that's what you can really lean on in those potentially tough times, in the heat of the moment, in the trading day, where we've all seen those intraday charts that can give us a little bit of a scare.
Well, it goes to confidence, and it goes to, you gain confidence in an individual stock by understanding the fundamentals. You're not just buying a chart and a relative strength line. You're buying a company that has a product that's hopefully revolutionizing the world. And if you understand what percentage of market share it has today and what the potential total addressable market is, and first of all, you have to know the history. The average true market leader over 94 weeks will have 3 to 5 major pullbacks down to the 50-day or lower. So if your stock is extended over the 50-day moving average by 20, 30%, you need to be ready to take a 20 or 30% decline all the way to the 50 and hold, which, as I've evolved, back when I had Broadcom, I just wrote it, raw. Now I try to hedge and trim around a core low-cost position, but you don't ever want to dislodge your low-cost shares. But you need to dampen that volatility, even with a complete, intimate understanding of the reason that company is changing the world. It's going to pull back. You have to know that and prep for, now it's extended to a level where it historically will correct. I'll trim off 10, 20% or hedge off 30, 40, 50%. Now the trick comes, let's say you get that right, which is very difficult. It pulls back to the 50. Do you unwind the hedge, or is it going to break the 50 and just blow up?
Exactly. That's a major crossroads, a major test. Is it going to continue to fall and mark the end of the move, or is that the time to be adding? So how do you know?
Well, you know, Charles Harris, you guys should all be following Charles. He kind of chronicles how around the 50, if it's going to get supported, you'll see some volume come in and high closes right around the 50. And sometimes, not sometimes, a lot of times it will break the 50 violently. It's experience and accumulation, knowing how to identify institutional accumulation through volume. But in the world of quantitative easing, which thank God is over, stocks and specifically indexes, volume did not matter like it did prior to 15 years, prior to QE. Volume mattered tremendously. Now with QE unwound or unwinding, volume's going to matter again, and trend following should work much better. Markets will be allowed to have price discovery uninterrupted or untainted by the Fed. So I think trend following is going to be much, it's never easy, but it will be less difficult. It's an opinion, we'll see.
We'll have to see. And I guess that goes to show that you're remaining flexible, right? As new information presents itself, I think that's also something that the greatest traders of all time do, is to have that flexibility and that nimbleness as well to counterbalance those strongly held beliefs.
If you're dogmatic in the market, it will roll you over. If you hold a position, I will not flex, I will not change my mind. Right now, I'm basically net short the market. If we had a follow through, if we had a signal that the market was turning up, I could go from net short to net long of maybe 20, 30% in a matter of days or even a day. But knowing it's experience, honestly, really helps. Knowing when you're starting a position in a bull market, I'll start off with 10% of my account first trade, opening trade. In this market, as a probe, I'll put 1/4% of my account. You have to know the season you're in the market, the duration since the last bull market or bear market ended. Where are you in the cycle? We don't have enough time.
Yeah, I know.
There's a lot of nuances.
A lot to unpack. But back to true market leaders. So you mentioned 90 some odd weeks, several major pullbacks over that time. 6, 7 beat and raised quarters, something else that we need to be keeping an eye out for? What else? What is that sort of secret sauce to something that is going to differentiate, okay, I can get 20% out of this, and then I'm out of here, to I need to be in there for the bulk of those 90 weeks to make life-changing money?
So you need to know who you are. Are you a short-term swing trader? I am not. I don't, for me, the word trader is almost a negative. I don't think you can make a killing. I don't think you can change your life with a 20% gain. My objective is to get into a bull market right after a bear and load up into the top 5 or 6 names and pyramid into these things really, really big. And in a perfect world, sit on them till the dead top and then blow them all out over the top. Now that's fantasy land. You have to trim and deal with things along the way. But
yeah, which is what we call kind of trading around a position. So you're getting in with 10%, taking some profits into strength, like you said, not selling out completely, adding on a pullback, hedging as needed.
And I pay 50% taxes. So long-term capital gains are a game changer for me. And I'll just really quick, some stats. The average bull market, true market leader lasted 95.31 weeks. The longest in history ever was Waste Management, 222 weeks.
Which, hey, we should have mentioned that on IBD Live this where we looked at Waste Management.
But I forgot. Okay, so this was in 1976, and Waste Management went up 1,011%. The greatest winner ever in history, that I did the study, and I did the study a decade ago, but it was at that moment, Ascend Communications went up for 91 weeks. It almost met within 4 weeks of the average. It went up 3,936% in 1994. I owned that stock on the first stage breakout, and in a weak moment on earnings, I blew the whole position out. And it was like 500 shares, but I got out of a stock that was going to go up 3,000%.
Wow.
And then
You could be on a private jet to your private island by now, right?
I'm buying what you're selling. But here's the thing, I learned, but over the next 10, 15 years, I forgot, because the exact same thing happened to me with Apple. In after hours, I got out on an earnings shake, and I called Bill O'Neill. He's like, what are you doing? He goes, you gotta buy that back, and you have to add 15% more than you initially had. So right after you get stopped out of the biggest stock in the market, not only do you have to buy it back, getting back above the, you gotta add to your position and make it bigger. So
wow, that takes a lot of guts.
Huge, huge guts. So the anatomy is, stocks don't double and triple in 3 weeks or 3 months. That's why yeah, if you're gonna get a monster, the average, I'm quoting the stat, it's 95.31 weeks. This study goes back 90 years. So how does the anatomy of a true market leader is new information, an earnings beat, analyst raise, and now the market's got to adjust to the new information. So if you can sit for 6 to 8 beat and raise quarters in a bull market, a dollar you put in could very well maybe 4 or 8 in 91 weeks. And if you go through past 52 weeks, you pay half as much in tax, which is critical. I'm not here to pay the government.
Well, yeah, we want to be protecting our profits, and so there's lots of strategies to do that. So taxes do definitely come into play. Jim, I know we're just scratching the surface, so we do want to open it up. Does anyone in the audience have a question for Jim? All right, you, sir, in the back row here, if we could get him a mic. Thank you so much, team.
Would you take the same risk at the age of 65 as you did at the age of 25 in terms of concentration of position?
I am in the stay rich business. When I was young, I was a cowboy. I frequently would lever my account up 200%. And the answer is no. The simple answer is no. This is a constant game of learning and evolving. I mean, last year I learned a lot. And it's amazing that I survived as long as I did with the lack of knowledge that I had when I got started. So the answer is, you learn as you go. My mentor, Bill O'Neill, became more conservative as he aged. I started when I was 21. I'm 57.
So things have changed, but if you you have to counterbalance that with all of that experience that you have now, so you know more what to look for, and you can be more disciplined about when to get out to protect those profits.
Experience does give you an idea of when a stock is permanently topped or it's tainted. And like my max exposure in my hedge fund, really even early in a new bull after a bear, would probably be like 140%. Okay, my partners are chill with, I don't have to double it up anymore. We're just trying to the compounding from 21 years of age to 57 over compounding is staggering what can happen. And God forbid, after 30 years, you have a 100% year. Don't ever forget the power of compounding. You just get your little calculator out and do the math. It's amazing. This is a quote I heard. It said, people overestimate what they can do in the short term and underestimate what they can do in the long term. And yesterday was the Fed meeting. And everyone's like, what's going to happen in the afternoon? And I'm like, who cares?
Yeah, take a step back.
I am in this for the next 40 years. I'm 57. I'll probably trade for 40 years. Every 3 or 4 years, we're going to see a major bull cycle. So I'm going to see 10 monster bull cycles. I could care less about what the Fed does 30 minutes after they announce. That's irrelevant. If you're not positioned before the Fed meeting, you're in the wrong business.
Yeah. Well, I think on that note, that we could see, and we will see more bull cycles and have more opportunities like the Broadcoms of the world. Baidu, I know, was another big winner for you in that internet age in China, shifting from Google to Baidu. But so many exciting stories and exciting opportunities to come, Jim. Thank you so much for your insights today, and thank you all for watching. We really appreciate it. Jim, always a pleasure.
Thank you, Allie.
Thank you.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.